Okay, gonna try to get a live trade in today. Looking for a second entry long here, but it's been bearish. Been quite bearish the last about hour of the day. So I'm just looking to see if we get a good signal bar and I can go long here. And thinks we might get it. So I'm gonna have to initially put a pretty big stop in, but I'm gonna trail it. Put it to break even here. And there we go. So second entry long. As you can see, I just want to show you that yes, you are. I get tons of questions about this. Yes, you are taking a big stop loss. But when I see this, which is a first entry, second entry short failure, and then first entry, second entry long, I'm trading context and then I just have a pattern. And I'm just being patient, trying to go with the trend. So I'm trying to go with price holding above the 21 EMA, and I'm trying to get what I think I can get with the ATR being how it is and the swing high, as I'm not going into support or resistance. And so, yes, I'm initially taking a very big stop, but I expect my move to go where I want it to go. If it doesn't, I'll just cut it shorter. I don't necessarily let it go all the way to the stop every single time. So just to reiterate here, big learning lesson because I get tons of questions about this. You saw it break, put my limit order in. I thought this market is moving quick. I thought this market's moving fast. Initially, yes, this is going to be a 1-to-1, right? So this would be 1-to-1 if I put my initial just risk order. I don't know where price is going to go. But as I'm watching price unfold, I know that the first 1 to 2 bars usually get my scalp. And I'm just going for 10 ticks here, just scalping. My stop is big. And then immediately once the entry bar is finished here, I will just move my stop loss all the way up to break even, or I'll move my stop loss to 1 tick underneath. So I am evolving my risk to reward ratio. And a lot of people don't get that. Price action is going on and giving you new data. You need to adapt and resolve the data that is coming forth to you. Just because you put down a risk to reward profile of 2-to-1, in this case, you got 2 times your risk. I don't know every single trade that is going to give me 2-to-1. I only know what my back testing says. In this case, I know that I go for 1-to-1 normal the time with a little bit of a higher edge, about 1.3. In that case, then therefore, what I'm basically doing is leaving this at, it can either be 1-to-1, in my case 10 to 8 ticks, and then all I'm doing is I'm leaving the profit target where I need to be, and I'm just completely managing. Think of it like this. I'm just completely managing the box down here. So as price action is evolving, I'm just reducing my risk. Just reducing my risk as price action evolves, getting it as fast as possible to break even. And then I know through my testing and my edge that I usually get, at least 80 to 90% of the time, my profit of 8 to 10 ticks, depending on how the market's moving. Then I will get that after the 1 to 2 bars, sometimes 3. Anything after usually turns to a trading range I know I need to get out. But also, I can see how price is reacting within the margin of risk that I'm assessing. So initially big risk, move it up after my entry bar. Then I'm only risking, 6 to 7 ticks, so back to 1R. In this case, I thought that would just be a good example. Thought I'd try to get quick second entry long with the trend. FOMC day usually does lead to some really good price action and high probability. You just have to really know what you're doing. Wouldn't trade it in the news, would trade it completely after, and that's what I'm doing. Price action also gets pretty good at the end of the day. Anyways, I digress. Sorry for this rant. Just kind of wanted to go over, try to get as much, educational information out there for you guys as I can. Trying to help out hopefully you guys enjoyed this type of content. Let me know if you guys want to see any more, and we'll see you guys next time.